It goes back to priority one. If you're an investor in an EB5 project, you want the green card. How do you get the green card? Is the jobs being created. So a lot of investors we run into, they don't just want it to come from construction. They want that construction that's needed for their jobs to be created to already be done. So they like coming into deals halfway built, 3/4 of the way built, because then even if tomorrow we're in Miami, a hurricane comes and everything stops and you collect insurance money and the building's done, they still get their green cards because there were enough jobs that were already created. So that is one thing that now that the industry's back, there's plenty of options. Investors want to see that jobs are created. And if the jobs are not already created, you better have some really good sales angles of other things that you can offer, because that's the number one priority.
And I think they want to see a surplus of jobs
created,
right?
Already.
So if the economist comes and says, look, I think this project is going to create 1,000 jobs, but I only need 150 EB5 investors, right? They sitting there saying, well, there's a lot of room there. So they don't have to.
Exactly. Yeah. You don't want to be close to the borderline. Yeah. It used to be that the standard was like a 20 to 30% cushion back when EB5 was at 500,000. But with the change of the law, the investment amount is now 800,000. They didn't up the job requirement from 10 employees. So essentially, you usually have much bigger job creation cushions now in projects because it takes less investors from EB5 for the same amount of capital. So now the job creation cushions are usually much larger for projects.
Yes.
Yeah, so of course, one of our gatekeeping issues is always how much money can I raise? And as our panelists have been discussing, it's a function of many different things, right? It's a function of how much money do you actually need in conjunction with the other pieces of capital that you have, how many jobs are being created, and how much money can we realistically raise based on the job creation that the economist is telling us. We're never going to raise the full amount of what they say. We might only be able to raise 50% of what the economist thinks, right? So that's a reality, right? And what does the regional center think is a realistic amount of investors to get for the project? Because as much as we might think that our project is great and we might have confidence in it, we might not be able to find 500 investors at this time for one project. That's just not realistic anymore. The days, I think, of having 2,000 investors in one project are gone. So, you need to have a realistic expectation of how much money you will raise through the program, I think.
Well, this all goes back to the capital stack that we have at the beginning. A lot of planning happens at the beginning before we even start securities work or immigration work or whatever.
Exactly. And I'd say historically, EB5 was pretty simple, always mezzanine debt. Like back in the 2010s, it was very straightforward. You've got the senior lender, you've got EB5 as mezz, you've got the developer equity. Every deal looked the exact same. Now that EB5 is at 800,000, so you've got more jobs to go around essentially, and interest rates are higher on the senior, all of a sudden we're starting to see EB5. You can be a little bit more creative where sometimes it's stretching in and eating the senior. We've seen it where EB5 is the senior, or it starts as mezz and then works all the way down and becomes senior. So just a lot more creativity now than before. Now, if interest rates drop again, we might get back to the old world of EB5 purely fitting in that mezzanine role, but now there's a lot more room for EB5 to go to different places.
Yes. I think there's also some distinction to understand whose role and what you do in this space. Like if you're a developer and you hire a regional center, you want to hire them to do it all, right? To go out, raise your capital. They track your investors. They track the job creation. The investors are generally limited partners that come in. They are self-funding their immigration. They're not being asked to really count the jobs and like understand what they're doing. They're putting their money up and hoping that everything goes well on the project's end and they receive what they signed up for. So, if you're a developer and you hire a regional center, do what you do, develop. Trust the regional center is doing what they're supposed to do. Obviously, there's communication and there's understanding about what's actually happening. But if you don't want to be part of the road shows in China and India and all these things, that's what you hire a reputable and a good regional center and capital raisers to go out there and do. You do what you do. You develop. And a regional center, they'll do what they do. They'll raise the money. They'll track them. They'll track the job creation, whether they go through audit or use a fund administrator. The RIA has put different steps in that now give extra security and protection to the investor, so they can feel a little bit more confident putting their money up, waiting years and years and years to be able to come here in hopes of green card first, capital investment return to them. And if they can make some money off of this, then they'll make some money off of it. But it's typically the last thing of the three that they're really interested in. But, you know, sometimes these conversations can scare developers in the idea that, like, holy cow, I have to be involved in going to, 7 countries, following Kate and Jen around the world, trying to find these investors. Not necessarily the case. That's what you hire Mike and his team to do.
Exactly. And there's two different business models. Some developers do it all themselves. It's completely integrated. They develop their own projects. They spend years building their networks. They find all their own investors. They have their own regional centers. And that's one business model. And that's completely fine. For us, we decide our development partners, they just see us as a lender. At the end of the day, it's EB5. It's a little weird in how the money's lumpy coming in. It's delayed, but they don't look at it as EB5 in the sense of them having to raise it or all the nuances. It's we're going to be getting some below market capital for where it's fitting in, and someone else is going to handle all the details, and we're going to do what we do best, which is build our project and whatever, execute on it, and we handle the other side. So two very different models, both can work, but we focus solely on being an EB5 operator, sourcing the capital. We could have gone into development, but we found what we do a lot better is the marketing part, getting the investors, being the lender, and we stayed in our lane.
So this is a really good segue into one of the important changes that the RIA made in 2022, and that was to require a fund administrator as part of the key team also. So we talked about all of our lawyers, our regional center, our escrow bank, our business plan writer, our economist. Final key person or entity is the fund administrator. It is put in place primarily so that, there's an extra third party that is neither from the lender or the borrower who will review when the money is being transferred between accounts to try and head off any bad scenario where, the money ends up being diverted to some place where it shouldn't go or spent on things that it shouldn't be spent on. Because at the end of the day, the money is supposed to be earmarked for job creation in the project. And while there is some wide latitude, we can basically spend it on any sort of legitimate project costs. It has to be spent on actual project costs. And so the fund administrator was put into place. A fund administrator has to be a lawyer, a registered investment advisor, or a broker dealer. And that third party needs to sign off on every transfer. So when the money comes into escrow from the investor, James talked about how, the money then will get released to the lender entity. They have to sign off along with the other parties that this is a correct transaction, that the release triggers have occurred. They have to review the underlying documents and actually sign off on the wire transfer details that the requirements are met. Then when the lender is advancing the money to the borrower to be used under the project, they also need to sign off on those draw requests. So they need to review the draw request, determine that sufficient documentation is there, that the funds are going to be used on the project costs in accordance with the definitive documents. So they need to review the loan agreement, make sure that the use of the funds is allowable under the loan agreement. They need to make sure that sufficient project costs are there to be paid. So they're actually taking on a lot of review and liability also to make sure that the funds are actually flowing into the project for the expenses that they're earmarked for.
And I think that's one of the big things that the RIA did and changed is it as whoever the lobbyist, whoever was looking at what's gone wrong in EB5 historically, there's two main ways that projects have failed. One is just a bad underlying investment, didn't make sense, bad real estate deal or bad transaction. Very hard to fix that through legislation. But the other way that a lot of deals went wrong was just outright fraud, money going to the wrong place. And this is trying to stop at least that half of the projects from failing. And now it's more a matter of that should be mostly taken care of with RIA, but I mean, you still have to have a viable project for it to be done.
Sort of akin to a construction draw request in a normal project, right?
Yeah.
You're going to the bank.
Exactly.
They're not releasing the money until somebody's been there and done all their inspection and looked at all the records and went to the site and, you know,
That's right.
made sure there's more than a mailbox there.
And right, and Mike mentioned that there are some structures that are vertically integrated, right? Where the lender and the borrower are actually related entities. And so it's not an arm's length transaction. There's actually a third check in those scenarios. The RIA requires those vertically integrated projects must hire a third-party construction consultant who will then review the draw after it happened to make sure that the money was actually spent on those things and went to pay the costs, and then report back to the fund administrator that that actually happened. So there's like a check before the advance happens and then a check after the advance happens to make sure that the project expenditures were paid correctly with the EB5 capital. And all of the records under the RIA have to be maintained by multiple parties, the projects, the regional centers, for a 5-year period after the last transaction occurred. So if we're talking about a loan draw that's happening over time, where maybe we have 25 draws that happen under the loan agreement, the 5 year starts on draw number 25. So we have to maintain the records for a long time. And that's part of what you're hiring the regional center to do. And I think this is a good segue into, you know, what records do you have to keep and what things are you collecting from the project, and, you know, what do you require of them to do?
Yeah, and pre-RIA, before the change of the law, the regional centers, I mean, we had our own compliance, but it wasn't as spelled out or as sophisticated as it is now. At this point, I mean, you're operating in a way where we're collecting bank statements every month. We're matching up transactions from our money going into the NCE, going to the JCE, matching it up to the construction expenditures and the GMAX contract or wherever the draw requests are. So it's to the point where us as the regional center, it's not just immigration compliance anymore. We've hired a couple new former bankers, compliance type people who are going through and acting a lot more in an accounting capacity and things like that, that historically didn't have to happen. But now under the new law, there's a lot of penalties. If you don't do it right, you can lose your regional center license. So there's just a lot more compliance to where even an EB5 loan feels a lot more like a bank loan at this point for how everything's being administered.
Yeah, definitely intentional on the part of Congress to make it that way, to make it more record heavy, to make it more formal of a process. So it's going to look like these transactions will look like you dealing with the bank. Instead, you're not dealing with the bank, you're dealing with a lender, just not a bank, right? But under the same sort of criteria and record keeping and compliance things. So basically, to sum up, you know, we're assembling the team, we're going through these gatekeeping issues, we're preparing the business plans, the offering documents, the economist report, our TEA reports. The end result is that, you know, we have these two packages like we talked about before. The regional center must file now under the RIA. It is required that the regional center files a project pre-approval application called the I-956F. That has to be filed with the Immigration Service with all of the final offering documents and all of the things. And then we're preparing separately the package going to the investors, you know, the offering documents. And the investors can review that and make their investment decisions with their advisors. And once they are ready to invest, they can start filing their application so long as the regional center has already filed their I-956F project pre-approval. So the Immigration Service will first look at the regional center's application, the I-956F, before they will start reviewing the investors' applications. And so first, they're gatekeeping and making sure the project qualifies before they start spending time looking at each of the investors individually. So they'll go through, make sure the project structure looks fine, all of these requirements are met that we've been talking about. Then once the Immigration Service approves the project pre-approval application, they'll start looking at the investor applications that have been filed. The investor applications at that point, USCIS has already determined the project is going to qualify. So they're just looking at what is the source of the investor's $800,000 from abroad. And that is where they will go on a deep dive. James was right. Manny and I will be looking at those investors. They will be running them through all kinds of Interpol checks, State Department checks, background security clearances, FBI, things like that. All of those will be run on the investor, plus something akin to what I call a forensic accounting on that person's $800,000. And so the Immigration Service will look at that and then decide whether or not to approve or deny the individual investor. So we talked a little bit about how that's why disclosures are important in the PPM, because we need to tell these people, hey, if your case doesn't get approved because you could not satisfy the Immigration Service that your money came from a lawful source, your money might be tied up in this deal until the loan maturity happens and we have a capital event. So all of those things, need to be made clear. And the other final thing that I think I would say is just like a closing thought from me is that when you do go down the road of EB-5, these people will be around. I mean, these investors, they will be around for like years. You're going to be dealing with them for years because they have to go through these multiple steps. They go through this individual step at the beginning where they file their petition and they show where their $800,000 came from. They then get a 2-year green card. And then at the end of the 2-year green card, they have to file this other petition to show that the project used your money and created the jobs. And so they're going to be relying on the regional center and the project to have maintained sufficient records to show about the construction process, that the jobs were created. They're going to require the documents from you all, basically, that they're satisfying the criteria to get a permanent green card in the United States. They're not going to be in a position to gather the documents. So, you're going to be working with your regional center partner and, all of your other professionals, your economists, your business plan writer, all these people are going to pop back up later at this final immigration stage for the investors. I don't know, Mike, you have any closing thoughts on that?
Exactly. It's a long-term relationship, both with the regional center and the investors. I mean, in the processing times from prior deals, we're going to be working with those investors for 12, 14, 15 years for Chinese investors that we had from 2014 and 15. So it's a very long-term relationship on all the sides. And yeah, I just want to make sure you're working with someone that knows what they're doing, how to handle it. And especially on the development side, having good record keeping is critical, because for the investors' success and for their immigration success, you have to be very buttoned up and detail oriented. Otherwise, there could be a risk for the investors in 8 years as they're going for that final approval if you didn't keep good records.